The price of Bitcoin fell by nearly 20% the other day. Is it time to panic? Nah, not really, guys. Not just another day in Bitcoin. But what did cause this massive market dump? I'm investigating that and more in today's video. So guys, welcome back to the 4-digit Bitcoin. A very harsh and fast market correction brought us back down under the $10,000 zone. And 10K has been such an important level psychologically for Bitcoin in this current market. Volume over the last 24 hours has been 70% higher than the previous 30 days, showing that there are a lot of buyers willing to pick up Bitcoin for 4 digits. As the market turbulence continues, I would watch for the $9,100 level where we have seen strong support before to be the line in the sand on the downside, with some people, of course, still calling for that CME gap at 8,500 to be filled. But market sentiment is actually just kind of neutral at the moment, with many investors kind of being unsure if we're going to go up or if we're going to go down, as there's not really much of a strong sentiment in either direction. Short term, it is looking a bit bearish for Bitcoin. But if you zoom out, the long trend is still very much in a bull zone. These drops below 10K simply present excellent opportunities for long-term value investors who are buying on the dip and who are cost averaging in over time. 1 million Satoshis is less than $100 today. Delicious. Watch for the market signals when the market flashes them, guys. The RSI is often a very reliable signal to buy and to sell. The 4-hour RSI was very solidly oversold. It was a great buy indicator yesterday. The daily RSI is also showing that there is a good opportunity to buy. Although the daily does have more of a potential downside on it, and if we're speaking specifically about the RSI. Now, these kinds of low RSI moments are often followed by big run-ups, since the market does not often maintain that oversold pressure for a very long time. In a lot of ways, this chop that we are seeing now looks very similar to the price action that occurred back in early 2017 when Bitcoin was struggling to maintain above the $1,000 mark. $1,000 Bitcoin. What a treat that was. Anyway, technical factors aside, a possible large reason for the market dump could be connected to a Chinese Ponzi scam that netted $3 billion in crypto. The Ponzi called Plus Token raked in EOS, Ethereum, and Bitcoin from unsuspecting investors. It seems that this Bitcoin is now on the move, with batches of 50 to 100 Bitcoin being moved into Binance and into other major exchanges and being dumped. Another massive Ponzi scheme stealing billions of dollars. How do people keep falling for this stuff? Human greed's crazy. Anyway, this kind of sell pressure from the Ponzi cashing out is just, of course, one of many factors that led to the current market downturn, or perhaps the secret signal of the market dump came from the good old CNBC counter indicator, where just before the big move down started, CNBC reported on a Goldman Sachs analyst slide which suggested that now is a good time to buy Bitcoin. Just before the market dump. Interesting timing. I forgot my tinfoil hat at home, but it would certainly be a good time for it. Anyway, regardless of what the price of Bitcoin is doing tomorrow or in 5 minutes from now, the long-term view on Bitcoin is crazy, from the simple fundamentals of Bitcoin to the larger macroeconomic situation. And it seems that there is a daily raft of news about how the global economy is, falling to pieces and all that fun stuff. You got Japan, Germany, the UK, Brazil, Singapore, Hong Kong, Mexico, Italy, and a bunch of others that are all facing recessions. Sweden has just joined the negative yield bond club. Best club in town, guys, with their 10-year bond going negative for the first time. The US 30-year treasury is under 2%. For the first time, though it is still in the positive zone. This is definitely a worrying trend if it continues in that direction. In fact, there are currently more than $15 trillion worth of negative yielding bonds. That situation is insane. I can't believe that investors are still getting these bonds. Just imagine that. You give the government $100 and they gave you back 98 or, well, something like that. How? What? That's crazy. So the US 30-year under 2% may not sound very exciting. It is certainly more attractive than a negative yielding bond. And the stock markets have certainly not been a safe place either. As the trade wars grow more and more bitter, the stock markets are being more and more volatile. All of this is leading to what is being called a once-in-a-generation dash to safety into the safe haven assets like gold and the few bonds that are still maintaining positive yields. And yes, the more adventurous investors will be taking small positions in Bitcoin. Many investors, especially the big firms, are very risk averse and they're very conservative in their investing. But the smaller, more agile firms and some of the bolder big funds have already been investing in Bitcoin. And as more Bitcoin-related products like futures contracts from Bakkt and ErisX and LedgerX and SeedX start to come on, or the ETF become more available, then more money will flow towards Bitcoin. And when these conservative funds feel that the necessary safeguards are in place to safely invest in Bitcoin, then they're going to do it. And on that topic, the Bitcoin ETF. When ETF? It's really become more of a meme at this point, but it will happen one of these days. The Bitwise CEO has said that the SEC's concerns have largely been solved around the Bitcoin ETF, and as much as there really isn't much of a barrier to getting the ETF approved, we still have not seen it get approved. Even though Bitwise has made multiple rounds of different ETF applications, they have been denied multiple times, but they are still pushing to get that ETF out there. Now, there have been significant recent developments in the crypto sector, which really stand as evidence for the SEC that an ETF will be okay to launch at some point in the near future. Key factors like the entrance of trading firm Susquehanna, or improved arbitrage, as well as new spreads and robust crypto custodians, which now have access to extensive insurance policies from Lloyd's of London, and of course that the markets are really broadly more mature than they have ever been. All of this is helping to solve the concerns of the SEC, and thus the Bitcoin ETF becomes a question of when, not if. And while you may not ever want to buy a Bitcoin ETF, there'll be lots of fund managers and lots of wealth advisors out there that will. And those people will not touch Bitcoin until an ETF is available. In adoption news, 60 Latin American banks can now use Bitcoin for cross-border payments. Now, this is made possible due to the partnership between a leading bank technology provider in Latin America called Bantanal and the cryptocurrency exchange BitX. Bantanal is a core banking service provider based in Uruguay that serves over 60 different financial institutions across 14 different countries with around 20 million people using their money services. The move should significantly lower fees and speed up transactions between countries. And this is really amazing to actually see a big bank choosing Bitcoin, not XRP or Stellar or something like that, but Bitcoin. They're using Bitcoin for country-to-country transactions. That's some pretty cool stuff. Anyway, guys, just my two stoches. As always, I'd love to know what you think about any of today's stories down below in the comment section. As always, you guys are totally freaking awesome. Thank you so much for watching today's video. If you did enjoy it, hit that thumbs up button. You can always subscribe to the channel if you are new around here. Long live the blockchain, and peace out till next time.